The stage, please. TJ from Arisen Ventures, Tal from Lightspeed Venture Partners, Chris from Phoenix Capital, and Inigo from Cambridge Associates.
Thank you very much for having us. We're excited to talk to you about our panel topic today, insights from Silicon Valley and what's happening next. So I'm TJ. I'm from Arisen Ventures, an early stage venture firm located in San Francisco, and joined today by two other VCs and one LP who is a large backer of a number of different venture firms. So we'll get a really interesting perspective today from our group of panelists. So maybe I can just open it up to intros, and Tal, maybe you can kick it off.
Sure. Thanks for having us. First of all, a Valley-based fund with offices in Israel, India, and China. Right now, we're investing out of our 11th fund, which is a $1.2 billion fund. I'm one of 3 partners on the ground in Israel, and we have, I believe, 14 or 15 others in the States. And we're actively looking for deals in Europe, more and more so in the past 2 years, I would say. So we're spending a lot of time here attending conferences such as this and on the ground in different cities.
Yeah, pleasure to be here. Hello, my name's Chris. I'm on the investment team at Stage Oct Venture Capital. We are a Silicon Valley-based VC, and we've got about 7 other offices around the world with a total of about $1.5 billion in assets under management. All of our LPs in our network are large corporations across Europe and Asia. So when we invest in US companies or wherever they are, we help bring their products to the Asian markets when they're ready for that. My main focuses are in AI and blockchain.
Hi, good morning. My name is Inigo Garcia. I work for Cambridge Associates, which is a global investment management firm. We invest over $1 billion per year in venture capital that ranges from seed stage to expansion stage in the US, but also globally, as we have 9 offices around the world, and I'm based in the San Francisco office.
Perfect. Well, great. Thank you guys very much for joining us, and excited to kick off. So figured I'd start talking through basically the pace of innovation and just sort of what you've seen. Tal, you've been in the industry now for a number of years, and want to understand, Tal, maybe you can kick it off, how rapidly are companies coming to market, and how rapidly are technologies getting adopted, and over the next 5 to 10 years, do you see that slowing down, picking up?
It's a good question, and probably it warrants probably a longer discussion. But I'm trying to think about this question in several discrete buckets. So one bucket is really the pace of core innovation, being new platforms being generated, new technologies being out there, and we've seen, I believe all of us have seen internet and mobile, especially consumer apps, kind of slowing down or maturing, reaching sort of saturation. And in the past 2 years, I would characterize it as lots of capital on the sideline, lots of funds, basically looking for the next platform to build on. Blockchain was one assumption, autonomous vehicles is another assumption, but I don't think really or VR and AR, was the hype, 12 months ago, and we'll see where that goes. But really, I don't think anyone can point to the next big platform and say, this is the next big thing, the same way mobile was or PC or internet in prior waves. Having said that, just the cost of launching a new business keeps dropping. The ability to manage businesses around the world from, without offices or, shared spaces or whatever, that keeps happening. So this in itself kind of, makes more and more companies sprout out. And as you said, there's lots of money out there, which is, again, an incentive for many people to kind of leave their desk jobs and start new businesses. I'm not sure if you would call that necessarily innovation, but definitely tons of new companies being generated, lots of new attempts at different things. I think we're in an in-between period. That's how I would characterize it. Like, people are kind of like sitting and waiting for the next big thing.
Interesting. So yeah, what's the next big platform shift basically? Is
You know, I'm personally, I've invested in the past in crypto, and I believe that we're waiting for the killer app. I don't think that this is just like my 2 cents. Like, I don't think we'll see it necessarily as a new type of currency or store of value necessarily. I'm looking at it more like a TCP/IP kind of innovation. So we're looking for for the internet browser to come up, and we've seen several attempts, especially in enterprise use cases, cloud, using blockchain, using the fundamental innovation to kind of drive new products out there, and that's where I'm looking and focusing my attention on. But he's the expert. So,
Perfect. Well, we'll come back to that in a second. Maybe Chris, you can give us kind of your thoughts in terms of pace of innovation. Are things speeding up or slowing down? And then for you personally, where are you spending your time?
Yeah, I think you got to separate into buckets. There's certain sectors that are definitely slowing down. Some like spaces like IoT are having trouble gaining traction, but at the same time, a lot of corporations are starting to find out use cases for bringing IoT on board. The 2 biggest platform shifts I've seen since kind of, mobile internet and cloud, I would say, are one, AI being applied to traditional SaaS-based companies. So intelligent software. I think really intelligent software will be the next big thing. With the new research breakthroughs that have happened over the last decade, really in the last 5 years or so with regards to deep learning and neural networks, we've seen kind of a new shift where there's this massive amounts of data from largely unchanged industries or industries that typically have lacked innovation, oil and gas, containerized freight, a lot of logistics-based companies. And with these massive amounts of data that are now being available online, access for data scientists to use, applying these neural networks and deep learning models to them, you can bring a ton of new value to these industries that really haven't been changed too much over the last few decades. So I'd say that's kind of the first platform shift I've noticed. And then the second, as he touched on, has been kind of the whole crypto hype behind the blockchain space. And really, the hype is warranted to a certain extent, but I think the most effective and promising companies we need right now, similar to how we kind of referenced kind of more the website being based analogy, is we need infrastructure in place that are being really developed at the protocol level of the blockchain, because really you can't build all these applications on top of infrastructure that's not there. So I think with regards to the blockchain platform shift, right now we're at a time over the next few years where infrastructure and protocol plays will be the first kind of new wave of setting the base for then applications and developers of all these different chains coming out there and different blockchain startups being launched to actually build on top of these protocols and improve the entire system, come up with all kinds of use cases. But yeah, I would say really at the protocol layer, that's kind of the fundamental change I've seen.
Mm-hmm.
Okay.
And if I could add, I mean, one of the reasons why we have been investing in venture capital and technology for so long, and that we are seeing a trend on, is not just the unicorns of the world, but what Chris was mentioning about new corporates that are non-technology adopting new technologies. This is the first year, probably ever, that we are seeing non-tech Fortune 500 companies investing more money in venture-backed companies than actually tech corporates invest in those companies. So the rules of the game are changing a little bit, and you don't only have like Goldman Sachs in financial services, but you have Walmart doing over $1 billion acquisition in Jet. You have PetSmart acquiring an e-commerce platform. So you have a lot of that adoption that is really starting to happen right now, because all these tech corporates want to also be viewed upon as like technology companies, not just an oil and gas service company or a retail company.
Yeah, I think that makes a lot of sense. Tech is, I think we've heard that now from two of you, is that, and Chris, in your point, AI is starting to impact other non-traditional sectors, and you, in your point, it's just non-traditional technology companies are starting to adopt and invest more into technology space, basically just seeing a permeation of technology happening throughout the global economy, which maybe that does accelerate things a little bit. And Inigo, maybe if I could just ask, sort of outside of tech being adopted by sort of the non-traditional players, at least in the space, what else are you perceiving in the markets as an LP? Are there, how are folks approaching this? Are there more funds being started now? Are they more specialized? Are traditional folks actually trying to invest through the more generalist funds? How are you perceiving these markets as an LP?
Yeah. So 2 years ago, we actually wrote a paper that we titled "Tech or Venture Capital Disrupting Itself," where you have incumbents venture capital firms in Silicon Valley that are very important and have generated very strong returns over the years, but you also have a new wave of venture capital firms that are raising smaller funds, maybe investing more at the seed stage, that are a little bit more maybe sector focused, whether that is artificial intelligence or blockchain or other areas. And we have seen that the number of venture capital funds raised in the last year has increased dramatically. So it's an interesting dynamic, and from our perspective, being investors, we recognize that it's important to balance a portfolio of venture capital between established managers and also emerging managers, because the representation of those emerging managers in the top quartile of venture capital firms is very significant. So you are missing out big time if you are not there. That also applies to these venture capital firms, by the way. A lot of them are being set up in Silicon Valley, but also we're starting to see a new wave of venture capital firms set up outside of Silicon Valley, because as Tal mentioned, today you can start a company basically anywhere else in the world.
And I think you were mentioning something to me before the panel about how returns have looked over time from a geographic focus. What has happened over the last, call it 10 to 15 years in terms of concentration of returns from a geographic perspective?
So through our database, which tracks and monitors over like 2,000 venture funds, basically dating back to 1985, what we see is that before the tech bubble in 2000, basically you needed to be in Silicon Valley to generate venture capital returns. Otherwise, there was very little innovation happening elsewhere. What we're seeing since 2000 is, again, the rules of the game changing a little bit, in that Silicon Valley continues to dominate in the returns generated in venture capital, but you're also seeing venture capital returns being delivered elsewhere in the United States, but also in Europe and Asia in the last 10 years very meaningfully. So when you look at the top 100 companies in every given vintage year, you see that that 20 to 35% of all value creation in those top 100 companies are actually companies based outside of Silicon Valley.
Interesting. And Tal, maybe we can take that back to you. I think you mentioned you'd personally been spending a bit of time in cryptocurrency, focusing more on the protocol rather than store of value. Cryptocurrency and particularly protocols really create a decentralized system and allow for broader adoption. Maybe you can talk a little bit about what you're seeing in terms of the evolution of cryptocurrency and sort of where you think we're at today, how you think that'll sort of evolve over the next 5 years, and where value is actually going to be created within that ecosystem.
Well, there are way bigger experts than me on this topic, and asking about crypto, looking 5 years into the future I think is close to impossible.
Yeah.
I mean, if you look, we just had a discussion, I think, in Amsterdam, just met one of the founders of Bancor, who did like the largest ICO in history, and she said they sold like $150 million worth of crowdfunding tokens in, I think it was 4 minutes. Right. Wow. So and that was like five months ago. So this is and obviously that seeded like a huge movement. So we're now seeing startups treating ICOs and tokens in general as a legitimate fundraising strategy, which again goes to the point of venture funding reinventing itself and so forth.
Yeah.
And we'll see if that gets any traction. But it's definitely I'm in the trenches talking to founders. It's on their mind, and they're definitely thinking about this as a valid course of action when starting a seed stage company. And if you think about it, in an abstract level, this allows for anyone, anywhere in the world to partake in this game that's called venture capital. And I think that's maybe the fundamental shift, because 15, 20 years ago, you had to be physically in Mountain View and ride your bike to where they put like servers in racks and whatever to be part of that game. And now you can just do it in 4 clicks from anywhere in the world. And I think that has tremendous implications. And in a way, the genie is out of the bottle. So whatever happens next will be, patching and kind of tweaking and maybe like adopting the system to work and kind of comply with, regulation and whatnot. But I don't think you can kind of turn back the wheel and say, no, we still want to keep it, under the kimono in a way.
Yeah. And curious, so along the lines of crypto, I've heard now of a number of established firms and funds putting capital into not only the currency out of the fund, but also investing into ICOs. Have you guys done that at Lightspeed, either of those?
We haven't. We've had a discussion about it to come up with a strategy. We ended up deciding that we're definitely we're actively seeking for ICOs that make sense. And for us, makes sense. I think most of the ICO, again, this is broad generalization, but if you look at the ICO landscape, a bunch of companies there are teams that could have never, raised venture capital fund just because the quality of the team or whether it's just like subpar.
Yeah.
And there's a bunch of companies where the token just doesn't make any sense because, from an economic perspective, there's nothing to drive the token value upward. But if we'll find something that where the team is amazing, where the product makes sense, and kind of evaluate it, just as we do with any other company, and it makes sense, we will not invest if that makes any sense.
Got it. And Chris, maybe you can talk to that a little bit at Phoenix, and have you guys looked at investing in out of the fund directly into currency? Have you looked at investing into ICOs before? How do you guys think about that as well?
Yeah, so we've actually been in the process, we just started a few months ago, of actually raising a small ICO fund that'll be focused on kind of Southeast Asia and Japanese blockchain startups. I can talk about a little bit how we kind of are evaluating and critiquing that, but really we're looking for the projects that maybe need between 500K to 5 million maximum in venture funding to build out their MVP or just kind of their base product. And then from there, it might make sense to do some capped, maybe $15 to $25 million ICO rounds when they hit specific milestones as traditional kind of venture funding works for the timeline. But we're not looking for projects to invest in that really just are, red flags right away. They have too high of raising way too much capital. There's no cap. The development team has no strong background or correlation. The utility of the token, as he mentioned, is completely disincentivized with what the product or platform is. There's so many solutions coming out that are just the decentralized version of an already existing centralized solution, and that's really not bringing enough value to make sense to invest in from an ROI perspective. Community building skills of these projects is massive. You really need to be able to have a team that can build up a community around them for a number of things. You want feedback to improve your system, product, or platform. You want to make sure that you have a community there to market your product so that word gets out about it. And it also builds kind of a support around the team and gives them confidence. And proper incentivization amongst the team members is very key in terms of building out their product. When these projects, crypto projects, go and raise a $100 million ICO and they don't even have a product built yet, the founding team is very disincentivized to actually execute on it because they already have millions of dollars they could cash out on their pocket right there. We've seen a lot of that, and we are raising a small ICO fund as kind of a test project here at the end of the year. But it's really interesting to see how the whole blockchain movement is changing the entire venture space. You're seeing all these companies now coming up with solutions where they can tokenize the equity that LPs have in funds, so that LPs maybe are investors in Lightspeed, but they want to sell out their equity to another corporation or potential institutional investor that wants to become an LP of the fund. And you kind of have a new market being built where equity shares can be traded through the tokenization method of these traditional venture funds.
And Inigo, I'm curious, how often is that coming up at Cambridge Associates specifically? trading equity from one venture fund to another, and is that something that you guys are tasked with dealing with at Cambridge?
Yeah, so our primary job and how we've been helping our clients invest has historically been directly in funds.
Yeah.
And then co-investments and secondaries is something that we looked up opportunistically. Now, a couple of things has been happening, I think, from my perspective in venture capital. One is that you have new entrants like mutual funds, hedge funds, corporates at the very large end of financing expansion rounds that are substituting IPOs. So if you think of like the valuation that Amazon or Google went public.
The private IPO, basically.
Exactly.
Yeah.
So today you have Fidelity or you name it, doing these late stage financing rounds at like very high valuations. So what is the impact for the small seed investor that backed that company maybe like 5 or 6 years ago? And also what's the impact into our clients, our investors that backed that fund because we like to see it at an early stage? So it's definitely something that we're seeing and something that we are considering how to execute. It's not going to go away or disappear anytime soon.
Okay. So, I mean, we've kind of talked about some of the large trends that we're seeing, but figured I wrote a few down and wanted just to see, what you think would have probably the largest impact over the next 5 years, and then also the least impact over the next 5 years. So the ones I have written down here: future of transportation, and so you can put things like ride sharing, you can put things like autonomous vehicles, you could put things like bike sharing into that category. Second one, future of work and future of living. Think about millennials who are renting, not owning. They want to be more mobile. WeWork is maybe a really good example of sort of the future of how offices may be shaped. AI is a third trend. Mobile, a fourth trend. Bitcoin and blockchain, a fifth. And then lastly, VR and AR. So Tal, maybe we could start with you. What'll have the most impact in the next 5 years, and what'll have the least impact over the next 5 years?
If this was like a virtual, like a fantasy league game, I would go all in on mobility.
Yeah.
And in a way, I think this kind of drives the innovation. I think about it a little bit like the race to space and the Cold War in a sense, because a lot of the innovation that you see in the other categories that you've mentioned, blockchain aside, but if you look at what happened in AI and GPU technology, what will happen to share living, even if autonomous vehicles are here, or when, or if these marketplaces kind of become mainstream, and I just think that it's going to fundamentally change how we live our lives in the next. And then the bet is, again, is it like a 20 years out bet? Is it like a 30 years out, maybe 5 years out? And that's like when we look at such deals and evaluate such deals, the discussion is not about the what, it's more about the when.
Yep.
Because if it's 15 years out, maybe you don't want to invest too early. But I think that will be like the wave that will definitely, in 30 years time, we will discuss this the way we're discussing internet today, I think.
Yep. Okay. Chris?
Yeah, I mean, with regards to transportation, that's drastically going to change for the next decade. As long as Elon Musk keeps coming up with a new project every day. I mean, he's now trying to do rocket ships from one side of the planet to the other in 30 minutes as transportation service. So I'll leave those up to Elon. We're very confident. We're starting to see AR, VR being applied to enterprise successfully for the first time. There's really kind of a dry patch over the last 5 years. And finally, the tech's just getting good enough that you could argue maybe in the next few years you'll start seeing in the enterprise space, instead of having actual desktops, you'll put on a headset as your work computer in your virtual environment, and you'll basically just be interacting inside the headset while you're working. And we invested in a company called Meta. They're focusing on that heavily. We've seen some plays with more regards to the functionality of AR, VR headsets. And there's a lot of software plays out there that need to really succeed for these headsets to ever become a thing. And we've already started in the last, I'd say, 6 to 12 months, really start to see some successes out of there with regards to hand gestures inside, with regards to the vision component, like things coming out like light vision. There's some new emerging techs, and we're starting to see corporations that are actually interested in working with these companies now to build out new unique products to completely revolutionize how we work in our everyday office environments, or potentially even from home, just putting on a headset from home. So AR/VR is pretty cool. And then lastly, since I've already kind of talked about blockchain a little bit, we've seen a lot of stuff going on in AI, really with regards to the kind of subconscious or non-direct applications, just basically applying neural networks for image recognition purposes. We've started seeing voice really gain adoption. The natural language processing barriers started to become overcome. And really, we've invested in a few emotion recognition plays that we've seen massive applications for the gaming industry, for the media and advertising sectors. We've had like interrogation programs approach some of these emotion recognition plays, governments of large countries asking if they can use this emotion recognition technology to use it for interrogation purposes on terrorists or whatever it may be. So there's really cool applications being made. Call centers are starting to apply emotion recognition technology to be able to understand while they're talking to clients the emotion level, and it's helping them to increase their conversion rates on these calls or these sales pitches. So yeah, there's some really cool stuff going on with AI too.
And I mean, being an investment manager myself, I'll let these guys do the big thinking. But I mean, one of the things that everybody has been talking about data for the last couple of years. But if you think about how this data is gathered and how the meaningful implications that it has for making decisions, as applied today with artificial intelligence and machine learning, I think it continues to be a very critical part of venture capital. Today we see B2B being a huge sector that is only growing. I mean, I cover also the mature software space, and IT is today represents the largest sectors for private equity buyouts. So when you think about the implications that data artificial intelligence has in corporations and companies making better decisions, I think that's very meaningful as it applies today, and I can't agree more with what Chris and Tal were saying about looking forward some of the implications of mobility and obviously blockchain and other areas.
There's one more domain that is actually not on your list,
Yes.
but I think is at least equally as important, if not more, which is genomics. And I think we're seeing the convergence of CRISPR technology and the sequencing and the cost of genome mapping dropping and so forth. So I'm not entirely sure. I know that there are a lot of VC funds shy away from it because it used to be very capital intensive and very risky business to be in. But I think this may be the next decade may be the decade for biology and chemistry and not necessarily computer science. And we're seeing more and more teams being formed around biohacking and applications around genomics. So that's one domain that we're very excited about.
Great. Yeah.
Actually, Tal, I'm very glad you mentioned that app because often our clients are sometimes concerned about healthcare and life sciences investing in venture capital. And we ran an analysis recently where we actually showed that the median venture capital firm in healthcare and life sciences has done better than the technology.
Yeah. Less competitive deals, you can get them for a better price, and if you have real domain understanding, you have an edge, right?
Yeah.
So,
Great. Well, I think we got a lot of bullish answers in terms of what spaces are next, but we missed what's going to have the least impact in the next the next 5 years. So maybe in the last minute or so, we can really quickly go. And maybe, Inigo, we start with you, and then we work backwards.
Least impact. Well, I think as it applies to technologies, I mean, I think like the mobile platforms are already there. You already have like Chrome and Apple basically like just running the world these days, and these corporates are very well funded. They have a lot of cash. I think it's hard for venture capital to compete with corporates that have so much cash in their balance sheets in creating core platforms. So like Salesforce.com, I think you are going to see a lot of things building on top of the platform. How do you maybe like compete against a Salesforce.com or a Google? It can be hard to see.
Chris, what's going to have the least impact in the next 5 years of the big trends we talked through?
Yeah, I largely agree with mobile as a good answer. IoT as well. I think IoT will eventually become integrated into every aspect of our life, no doubt. But timing-wise, I think it's still we're still finding really hard use cases for these IoT startups to actually gain enough revenue or traction from any of their partnerships to really become very successful companies, have high exits, and really get enough institutional investors attracted to investing in them. So really, there's still not quite enough funding going into IoT, and I think it's actually, maybe it's hit a peak this year, but I don't think it's going to continue rising. I think we've started to see it hit kind of the stagnant level, and I guess I'm a little bearish on IoT over the next few years, as from both a returns perspective and from a kind of a use case perspective initially.
All right, last one, Tal.
Yeah, I wouldn't say like necessarily least, it's like not necessarily bearish, but I think SaaS is very well understood now to the point where it's almost a commodity, where you can find like 5 companies attacking the exact same sector and really compare them on like 5 KPIs, and it's not as much as a breakthrough as it used to be 5 years ago. So my bet is that we'll see less and less of that, and that kind of that business model kind of reaching saturation and kind of taking over the entire software world, and VC money will kind of shift elsewhere.
All right, great. Well, thank you guys for joining us and telling us what you think is next, and thank you South Summit audience for listening.
Thank you.
Thanks, guys.